This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Saudi Arabia has been cranking up oil refining operations to capture strong profit margins, helping the kingdom offset revenue lost from declining crude prices and exports. The world's top oil exporter has in recent years invested heavily in expanding and modernizing its refining and petrochemical capacity at home and overseas to meet growing demand for fuel and plastics while also securing outlets for its crude oil. Saudi Arabia has 9 local refineries with a combined capacity of 3.33 million barrels of oil per day, accounting for roughly 3% of global demand, which are configured to process its domestically produced crude oil. It operates another 4.3 million barrels of oil per day of refining capacity abroad, including in China, the United States and Malaysia.
Oil prices were little changed on Tuesday on increasing expectations members of the Organization of Petroleum Exporting Countries and their allies, known as OPEC+, will decide to increase their output at a meeting later this week. Brent crude futures were up 11 cents, or 0.2%, at $64.85 a barrel by 0640 GMT, while U.S. West Texas Intermediate crude rose 6 cents, or 0.1%, to $61.59 a barrel. The WTI contract did not settle on Monday because of the U.S. Memorial Day holiday. Crude oil edged lower as the market contemplated the outlook for rising OPEC supply, Daniel Hines, senior commodity strategist at ANZ, said in a note.
Moving on to the top news in the energy sector.
South Africa has offered to buy liquefied natural gas from the United States over a 10-year period as part of proposals to secure a trade deal, according to a ministerial statement posted on the South African government news agency website. The document, signed by Minister in the Presidency Kumbudzo Ntshavheni and posted late on Sunday, said that South Africa aims to import 75 to 100 petajoules, roughly 75 to 100 million cubic meters, of LNG per year from the United States, the world's biggest LNG exporter. The minister said that would unlock approximately $900 million to $1.2 billion in trade per annum and $9 billion $12 billion for 10 years based on applicable price.
Norwegian oil and gas investments are expected to hit a record this year, and to decline next year, a statistics office survey of industry players showed on Tuesday. The country's biggest business sector expects to invest 269.1 billion crowns, $26.62 billion, in 2025, up from a 253.8 billion crowns estimate in February and compared to 251.2 billion last year. Preliminary estimates for oil and gas investments in 2026 were 206.6 billion crowns, compared to a previous estimate of 197.1 billion crowns in February. Forecasts typically rise as companies finalize spending plans in the months leading up to a new year. Next, we have the top news in metal markets. London metals edged lower on Tuesday amid weaker copper demand in top consumer China, although a softer dollar cushioned the fall. 3-month copper on the London Metal Exchange fell 0.33% to $9,578.50 per metric ton by 0719 GMT. Downstream purchases are relatively cautious, end-user demand is gradually slowing, and fundamentals may weaken as copper demand approaches its off-season, said Chinese consultancy Everbright Futures.
India's steel ministry favors extending import curbs on low-ash metallurgical coke because there are sufficient domestic supplies, a source familiar with the matter said, dealing a blow to steelmakers who oppose restrictions on overseas purchases. India, the world's second-largest crude steel producer, imposed quantitative restrictions in December on imports of low-ash met coke, setting country-specific quotas and capping purchases at 1.4 million metric tons for January to June. We are in favor of extension because domestic capacity should be utilized, said the source, who declined to be named as deliberations were not public.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures inched lower on Tuesday, after 2 consecutive sessions of gains, as the anticipation of higher output and inventories weighed on the market. The benchmark palm oil contract for August delivery on the Bursa Malaysia Derivatives Exchange slid 27 ringgit, or 0.7%, to 3,806 ringgit, $903.61, a metric ton at the midday break. Prices are weaker due to the anticipation of increased stocks, while production is expected to be as high as last month, a Kuala Lumpur-based trader said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.